Hello, everyone. This week I'm just going to be posting a brief lecture on what the midterm will require for this week. Remember that this midterm is due this week and it covers chapters 1 through 6. What you will be seeing on the screen is the actual test questions. I will be explaining to you what is being asked from you with the goal to provide you a little guidance as to how to approach each of the questions. If you have questions, you can always reach me. I will guide you once you contact me with your specific question. And if you need a refresher on the concepts, you can always go back to the appropriate chapter and review that lecture, which will guide you in terms of the concepts. I have included questions that were similar to your homework assignments. Not the same question, but the same concepts, similar concepts. So there's no surprises here. So what you see here are 10 questions. Each question is worth 10 points. So this midterm is worth 100 points. I try to choose one from each chapter and from each concept within the chapters. So you'll see that some of the questions may be related to one chapter, while others is just one question for that particular chapter. So the first one here, let me try to increase this for you so you can see better. It's asking you for calculating the missing amounts. So it says the fundamental accounting equation for several businesses follows. Calculate the missing amounts. It's worth 10 points. You are given the general accounting equation. This is not the expanded equation. This is just the general one. Assets equals liabilities plus owner's equity. And you're being asked to find the missing numbers. Some of them are asking you to determine the owner's equity, while the others are asking you for liabilities, and the others are asking for assets. So just remember your algebra concepts that you have learned throughout your years of education. Assets equals liabilities plus owner's equity. I'll do the first one for you. You're giving $27,800 as assets equals liabilities is $5,560, and you're asked to find out what owner's equity is equivalent to. Knowing your algebraic concepts, you know that you have to subtract the $5,560 on both sides in order to isolate owner's equity. So if you take the subtraction to be $27,800 minus $5,560, you will get an answer of $22,240, which is your owner's equity. So in this case, owner's equity is equal to $22,240. And you will follow the same procedures for the remainder of the 4 questions here, but just finding out what liabilities is for number 3 and what assets is for number 4, and so forth. Second question is also 10 points. It gives you a business called Easy Copy. Had the transactions listed below during the month of June, and they're giving you 8 transactions. And what you need to do is show how each transaction would be recorded in the accounting equation. And in red it says enter decreases to account balances with a minus sign. So make sure that if this is minus here, then you put minus before you plug in your answer, okay? So I'm going to do the first one for you. John Amos started the business with a cash investment of $60,000. Remember that when you are journalizing or recording transactions, it has to affect at least two accounts within the accounting equation. In some instances, it's three. So the key here is to always remember that you have to record whatever it is that's happening at least twice in two different places within the accounting equation. So I'm going to decrease the space here a little bit so you can see the whole thing. This here represents tabular form. This is the first concept that you learned in this semester. So refer back to chapter 2, I believe. So John Amos started the business with a cash investment of $60,000. And remember those key words. One of them is cash, and the other one is an investment. When it's cash, you're dealing with the cash account. When it's an investment, you're dealing with owner's capital. So here up in the top we have the general accounting equation, assets equals liabilities plus owner's equity. But the bottom one will have the expanded equation. And remember that owner's equity equals owner's capital minus owner's drawings plus revenues minus expenses. So since investing $60,000 in cash will affect the cash account and the owner's capital account, we're going to record this as a positive $60,000 to increase our cash account. And we're going to record this as a positive $60,000 for owner's equity. Now let's pretend that this, instead of an investment, was that John Amos took out money from the business. So you know that that's going to be a owner's drawing, and when you take out money, you put the minus in front of it. Or a better example to learn with cash, let's say you're paying for cash for equipment, then you better make sure that you put the minus on whatever that amount is. Okay? So this is what you do for transaction number 1. That's it. And you continue on with the next transactions and put it under 2 for the transaction 2. Anything that gets effective for 3, it's under the transaction number 3, and so on. At the very end, please make sure to write down your totals. And it's just the total from this column here. Whether it's positive or minus, do addition and subtraction as needed in order to come up with the totals. What is wrong with my computer today? Okay? And you do the same thing for each one here, for accounts receivables, for equipment, for accounts payable, for capital, revenue, and expenses. Okay? And that's going to be it. And the way that you know if you did things right, remember that assets must equal liabilities plus owner's equity. So at the end of all these columns, when you add them, make sure that these 3 columns add to an amount and it equals to these 4 columns. Okay? If not, then something happened and you gotta go back and check it. For number 3, it's asking you, at the beginning of September, Alexandra Perez started Perez Investment Services, a firm that offers advice about investing and managing money. On September 30th, the accounting records of the business showed the following information. What this information is telling you is that the cash account has a total of $33,100. The accounts receivable account has $4,000. The office supplies has $3,400, and so on. Okay? Now it's asking you to prepare an owner's equity statement for the month of September 30th. Okay? And here I'm giving you the answers to this. I don't think this is even in the exam, so you're getting a freebie here. And you gotta give me the total of that account and put it in here. If you can't remember what an owner's equity statement looks like, go back to the textbook and look at one. It'll tell you that you have to find out what owner's capital the balance of owner's capital on September 1st. Well, the balance of owner's capital on September 1st is right here. Okay? So you write down here in this column 26,000, in this column right here, 26,700. Okay? Then you come up with the net income for for the month of September. What is net income? You're not going to find it here. You're going to have to determine that. Remember that net income is your revenue minus your expenses. It's revenue minus your expenses. And if you have a positive number when you take that subtraction, it'll be net income. But if it's a negative value, you know you're not making money, so it's net loss. So I'm telling you right now, you're going to have a positive number because I put the net income in there. And you'll put it in this field here. Whoops. In this field right here. Okay? And this line here, the bottom line here, means that you kind of have to add these two values and put it here, okay? In this third value here. And then this here is going to be your last field that you need to fill out. I'm not going to give you all the answers, but I'm trying to help you, give you some type of direction. Then it's also asking you within this problem to prepare a balance sheet for Perez Investment Services as of September 30th. For this one as well, go back to your textbook to look at an example of a balance sheet to see what it looks like. I'm giving you the categories right now. They're right here. Just kind of have to come up with the values. It's asking you for cash. That's the first one, is cash. Okay, so you got to look up here. What is your balance on cash? It's 33,100. Okay, so you're going to put that value under cash. Okay, it's asking you for accounts payable. So you look up here and see if you have accounts payable. And accounts payable is right there, 5,700. So you put 5,700 here in this field. And so on and so forth. If you don't see the category, that means you have to do something with it. Just like up here for net income, there's no net income category up here, but you have to figure it out by taking your revenues minus your expenses. Your revenue is going to be your fees income, and here are all your expenses right here. It's going to be this value minus this value to give you the net income, okay? So if you see the category up here, transfer it. If you don't see it, that means you have to do something with it to get that number. And then make sure that at the end you total your total assets, so this column, and then you total your liabilities and owner's equity on this column. And they must match. If they don't match, you did something wrong. Okay? Number 4, it says Denise Carswell decided to start a dental practice. The first 5 transactions for the business follow, and they give you the information for the first 5 transactions. And it's asking you to select which 2 accounts are affected in each of the above transactions. Just like your problem number 1, where you have to determine at least 2 accounts that are affected, that's what it's asking you to do here. But it's asking you to determine which one's a debit and which one's a credit, okay? So transaction number 1, Denise invested $90,000 in cash in the business. Okay, it's an investment. And in order to increase your cash account, go back to that cheat sheet I showed you in one of the PowerPoints that tells you which account increases and decreases. In order to increase your cash account, you need to debit that. So you're going to put cash here under the debit. And then the other account that gets affected when there's an investment is owner's capital. So you know it's going to be owner's capital. What the textbook likes, what this program likes to do, it writes down the name of the business, and then they put capital. And I believe that your test, it has a drop-down menu, so you could choose that option. And you do that because when you credit the owner's capital account, you increase it. So that's what you got to do, a credit. And then you do the same thing for the remainder of the transactions, okay? But that's the answer for the first one. Then it's asking you to post the above transactions into the appropriate T account, okay? So for the first transaction, you know that it affected cash. It was a debit for $90,000. So you're going to write it down on number 1. Okay, you're going to write down right here $90,000. Okay? And anything else that is affected within these transactions that it affects cash, you write it down here. If it deals with equipment, then you write it down for equipment. If it's for fees income, that's the space. If it's advertising expense, that's the space. Supplies and owner's capital. One thing I would like to point out is that you have 4 lines. Just because you have 4 lines on your test doesn't mean you have to fill up every single line. I'm giving you a clue right here. You're going to have 1, 2, 3, 4, 5 transactions posted under cash, 1 transaction under equipment, 1 transaction under fees income, and I'm even telling you where it's going. 1 transaction for advertising expenses, 1 for supplies, 1 for owner's capital. Okay, and what you need to do at the end of these the T accounts is you need to give me the balance on each of the T accounts for this side and this side. Okay, and remember that only you provide me the balance on where the balance is greater. So you find the total for this column and the total for this column. You minus the biggest one minus the smallest one, and let's say that the positive balance ended up on the debit side, then you'd write it right here. If not, if it landed on the credit side, you write the balance down here. Okay? The clue for cash is that your balance is going to end up on this side, on the debit side. That's it for number 4. So going on to number 5. It says the following T accounts show transactions that were recorded by Housing Locators, a firm that specializes in local housing renting. And it's giving you the T accounts. Okay? Prepare a trial balance for Housing Locators for the month of December 31st, 2016. And here's your trial balance. What's a trial balance? You're literally going to give me the totals of each of these categories and record them down here. Okay, so I'm going to do the first one, which is cash. If you add up these 3 columns, it's $223,000, I believe. I don't have my calculator with me, but it's just addition. It's 190 plus 30, which is $220,000, plus 3,000 is $223,000. And this side is going to be 46, 56, 57, 58, 59, 60, 62,700. Okay? And if you minus $223,000 minus $62,700 is going to give you, give me a second, I need my calculator. 223 minus 62,700 is going to be 160,300, and it's going to be on the debit side. So I'm going to go down here and put cash on the debit side. I'm going to put down $160,300. That's it. Okay? And you go through the rest of them. The one for equipment, you can't see it here, but on your test you'll see that this one is accounts receivable and this one's accounts payable. Okay? So you're going to go down. You're going to find the balances of each of these T accounts and record them down here with the account name and whether it's a debit or a credit. Remember, at the end you add both columns and make sure that both columns are equal. If not, you did something wrong. Then it's asking you to prepare an income statement for housing locators for the month ended December 31st. If you don't remember what an income statement looks like, refer back to your textbook and make sure that you follow them. I'm going to give you the categories. It's going to be revenue. You're going to have fees, income. Then you're going to have expenses. You're going to write down what your expenses are: salaries expense and telephone expense. Then you're going to have your total expense and your net income. So I just told you net income is a positive number, so you know that this number is going to be positive. Okay? Number 6 is asking you, is actually giving you transactions on this one. It's giving you 10 transactions right here, and it's asking you to analyze the above transactions and record them in the journal entry for each transaction. So now it's going to be asking you to write down each transaction here, and I have 1 through 10 labeled already. So I'll do the first one. Gave cash refund of $1,500 to a customer because of a lost package. The customer had previously paid in cash. So we're going to have to decrease our income and decrease our cash account because we are losing revenue, because we're no longer going to be selling that item. We're actually giving them a refund because they lost a package. So our first transaction is going to be a debit for fees, income. And in order to reduce our revenue, you need to debit the account by $1,500. And remember that our credit is always indented, and you're going to credit our cash account by $1,500 because we are giving back that money to the customer. So in both cases, we're decreasing the accounts. And that's it. You don't even have to give an explanation. Just go on to number 2 and continue recording these transactions, okay? And at the very end, for this one, you're not going to have to do both of these columns. You don't have to find the total. Just record them, okay? For number 7, is actually giving you transactions again, and is asking you to post the above transactions into the appropriate ledger accounts. So number 6 is where it's your general journal. That's where all the transactions go in one place. And remember, the way that I explained it to you is that if you continue doing these journal entries in the general journal and you want to find out what the balance is for a certain account at a certain time, it's very difficult to determine that, and it's also very difficult to identify any errors because this general journal can become massive in even a month worth of revenues or transactions. So what you do is you take your general journal and you separate the transactions based on the accounts, which are the ledger accounts. So what it's asking you to do is record each of these transactions in their appropriate areas. Okay, so you're gonna go, this is fees income, so there should be a category over here for fees income. Right here, fees income. And if you notice back on the top, what was our fees income? Our fees income Where was it? You're going to record this transaction under fees income right here. Oh, I'm sorry, I'm looking at the wrong one. That's why I'm getting confused. It's number 7. Fees income. So what you do here is, I'm going to scratch everything I just said. So you're going to take this transaction on September 1st. Whoops. On September 1st, Jewel Tucker invested $60,000 in cash to start the firm. When you invest in cash, you affect the cash account and the owner's equity, the owner's capital account, right? So what you're going to do is take this transaction and put it into the cash account because you just determined it affects cash. What is wrong with my keyboard today? So you're going to record this as September 1st, 2016. And you are going to increase the cash account so it's a debit of $60,000. And then you put the balance of $60,000. And you know that it also affects owner's capital. So you're going to go down to owner's capital. And you're going to put down September 1st, 2016. It's going to be credit of $60,000. And then you put down $60,000. Okay? And you go on to transaction number 2. Purchased office equipment for $6,500 on credit. Okay, and received an invoice payable in 30 days. So you know that you're gonna increase your equipment account. Okay, so you go to equipment. It's what? $6,500 on September 4th. Go to equipment. You put down September 4th, 2016. And you're going to, in order to increase your assets, you do a debit. So it's $6,500. And your balance is $6,500. Okay, and you did it on credit, which means your accounts payable is going to be affected every time you pay something on credit. So it's September 4th, 2016. And you're going to credit $6,500. And your balance is $6,500. Okay? Now let's say that a future transaction also affected the accounts payable. So you write down that future date here. Let's say it's September, I don't know, 30th. And then let's say that the transaction was a debit of $1,000. This is not an answer right here, okay? I'm just giving you an example. So make sure that your balance here shows $5,500 now, because you have a debit of $6,500 minus you have a credit of $6,500, and then you debited $1,000, so now your new balance is $5,500. Okay, so that's what you would do, and so on and so forth until you go through all of the transactions. But this is not an actual answer. This is just an example. Okay, and that's all you do for number 7. Now number 8 is actually giving you some information, and it's asking you to do adjustments. So you're going to record the transactions based on the adjustment that needs to happen. Number 1, it says on June 1st, 2016, the Brown Company, a new firm, paid $7,000 of rent in advance for a 7-month period. The $7,000 was debited to the prepaid rent account. So if it's $7,000 for 7 months, you know that each month the rent is $1,000. So you're going to record that transaction because these are for the end of June. On June 1st, you paid $7,000 in advance, and you're recording transactions for the end of June, so it's only affecting 1 month. So 1 month worth of rent is $1,000. So you're going to record that as rent expense as a debit for $1,000. Remember, your debits go first and your credits go next. And you're going to credit the prepaid rent account for $1,000. That's it for number 1. And then you do 2 and 3. For number 9, it's telling you on December 31st, the ledger of Hernandez Company contained the following account balances, and it's giving you the account balances here. Please prepare the closing entries for the above transactions. Okay? And in order to close the transactions, you know you have to follow 4 simple steps that are included in my lecture. And also in my PowerPoint, it tells you exactly how to do it. So I'll do the first one. Okay, the first one will be a debit to fees income for $53,000. And a credit to income summary for $53,750. And for this one, I'm not going to explain to you how to do it because it's very self-explanatory on my PowerPoint. It tells you what you need to do for these 4 steps. Okay? But I gave you the first one. And number 10 is just asking you to arrange the steps of the accounting cycle in the proper sequence. And that's also on your textbook and it's also on my PowerPoint. And I'll tell you what the first one is. It gives you an overview. I think I included it in the PowerPoint. It was a visual of the accounting cycle that you just learned. So the first one is analyze transactions. Okay? And you fill in the rest. And that's it for the test. If you have any questions, please call me, send me a message, text me, whatever you need. And I will try to answer all your questions. And remember that the test is not timed, so take your time, but it is due this week. So make sure you do it before the deadline. And refer back to my lectures so you could get a refresher on how to complete each of these questions. Good luck to you and thank you for your time.